Skunks and Crypto. Follow me on Twitter at Ruminations. I think the last time that I did this was in July 26th. I haven't changed much of my views since then. So I'm just going to get down to some explanations. So we're looking at AMC. If you like this, please like and subscribe. I'm going to be so infrequent and inconsistent in the delivery of these that maybe just tuning in randomly will be more fun than, hearing the same old crap every single time. That being said, I haven't changed my mind much since July. Still think AMC is shit. I think it's just a product of the bubble. That's all. So as such, if it is a product of the bubble, news alert, doomsday people, the bubble has been going on since, I don't know, 1913, some would argue. Some would argue before that. Things started getting really hairy in 87 with Greenspan. And it's just, kept going up and up and up and up and up and up. And yes, when it falls down, it will be spectacular. But right now, got to be careful out there. And while I am skeptical on, what's going to happen with AMC, inevitable, as Rick Rule. I love Rick Rule. If you don't know Rick Rule from Sprott, you go to Google right now. Go to YouTube. Just look up Rick Rule. Just listen to him talk. He's just a genius. So, but as he always points out, inevitable by no means, implies imminence. So just because something's inevitable, the collapse of the currency or this, that, and the other thing, it doesn't mean imminent. As, the dollar dooms people, of which I am one of, have been, just learning decade after decade since, that pivotal 71 moment. So that being said, just, if you're going to accuse the other side of the intellectual debate, so to speak, of hubris, try not to have any of your own. All right, moving on to things. My AMC play. So this was about July. We got out around the 27th. It started really going against us. You saw how high this wicked in the 40s, etc. And it started to do this basing. So I haven't done anything because I was so uninterested. At which point, this volume kept on picking up, and I was basically sticking with the original videos. I said, you know what, if it breaks above new highs on great volume, I'm super impressed. I'm ready for it. But that's not what happened. Instead, what happened was, a pretty clear, it has been a while. Let me see where my Epic pen went. There it is. I knew I'd find you. Where'd you go? Ah. Yay. All right. So I'll put this tool on here, actually. This is not through TradingView. This is my own little tool. I love it. You can get a free version that has some limited function, or you can go buy the whole thing for like $20. But anyway, we got 1 arrow, we got 2 arrow, we got 3, and this forming a nice basing pattern. So where that goes, up or down, we don't really know. But we do know what we do have. What we do have is that down arrow, followed by that base at which we got out, followed by this uptrend, and then is this going to invalidate it? All right. So that's really what I was looking at. And one thing I found very particularly interesting is when you look down here at this volume trend, volumes was starting to diminish. So if we make a run, which I think we're going to, but if we make a run toward this, 150-day moving average around the 30 area, 3050, 3063 right here, we make a run to that, that still implies that we got some way to go down. So let's see what that means. All right. Bing, bing. Price range. I love TradingView. So if we were to continue from where we are now, and we're going to go down just to that 150, we still got another 16.9%. My feelings are, if you look, that coincides with a really good level of support. Okay, so let me just clear this all. How do I do that? There we go. All right, so if we look at the 61.8 retracement from the highs, all right, you're going to see that's a very nice support line right here. Okay, or let me draw a box around it. Very nice support area. Ooh. There we go. That's a very nice support area, to be in. So if we break below that, which will put that average at risk, I'm very well certain that the next target that we will see is going to be it's going to be this guy here. That's the 200-day equivalent. Okay, um, stands at $24.41. So I think there's a significant amount of downward area to go on this. And when we're looking at the volume contracting at these prices, relative to that first massive upswing, I don't think this has much strength because, again, what I look for is going to be some kind of a basing period. And then I'm going to try and jump on, if I'm playing long, I'm going to try and jump on to that rising force, but key will be this volume. All right, I'm not going to do nothing unless I see volume like that. That's the important thing. All right. So what I think you have going on here is I think as this starts to base more, you're really just showing the same type of action. It might not be a mirror image, but it's that same psychological sentiment that's underpinning this period. And that same sentiment could be starting to go right here. So does this realize it's a floor and turn into a sky jump, or does it realize that it's a ceiling and begin to come down lower? If it comes down and just meets the prior jump up, we could still be looking at anywhere from $13 to 16 or so, which a lot of people are saying 15, but who the hell cares what a lot of people say? So that's what we're looking at on the weekly basis. So if I were me personally, I'm long puts. I'm not going to get into dates and durations, but I'm long puts. I've been long puts for about a week and a half. They're doing very well. Got very scary toward the end of the week last week because we had this period. We had this wick occurring. And as that wick's occurring, you see all the videos appear. See the bears, Robin Hood, and yet another reason why it's so preposterous that price is still performing in this way. It should be at the moon. You're seeing all those videos celebrating. Don't really like that. Not really a huge fan of that. So I don't think that's going to be the case. I think these people are partying too early. I think they partied too early, really celebrated, and now they're just paying. They're just paying on the way down. So if volume really bursts out, if we see volume such as this, let me look at that period again. So if we see volume like that, where is this here? We see this type of volume. See when this broke out here, that type of volume. If you see that start to appear here, and most importantly, if that price is on its way down, then those are the areas you're looking at. You're looking at $30. You're looking at $24.41, and you are looking at 20, and then you are looking at 16. So that should be what's going on your mind when you're thinking about going long the stock right now. All right. You want to survive this first. And believe me, it really looks like this is coming either way. So whether it's manipulation or otherwise, the chart is clearly telling us something here. And if it's confirmed with the break to volume, especially if we break the $30 range, we break that average, if it confirms and it continues down, that's where you're eyeing. That's where you're eyeing. You want it to base at these areas, continue for a period, a very boring and aggravating period. You could be saying this whole time, oh my gosh, I could be averaging in and getting a great price. You could be doing that, or you could just be watching the chart because we have the data to do that now. This is 2021, and we can look for this volume breakout, and then we can get our stupid ideas of what we think the future is going to be out of our head, and we can just ride the clear path. Okay, and wait until we start seeing this type of volume. Let me clear this mess of a screen. We can wait till we see this type of volume and this type of price action to know when to start getting out. All right, and if we didn't get all the way out, we'll use this type of price action with this type of volume to pair our position even further. We're not going to be buyers again until we see this type of candle after this type of period, and most importantly, confirmed by this type of volume and that second candle. All right, so this whole period, we may have missed. Shame on us. So, not like an AMC, if that hasn't come across. Not thinking that that's just a great play right now. think it's yesterday. So what we got to do is we got to look for opportunities where others aren't. And that's brought me to Carvana. And Carvana on a weekly basis, I've been finding extremely interesting. And this is just, I'm only getting into technicals here. I can really get to the nitty gritty of the fundamentals, but what would be the point of that? Who's going to watch that? Carvana, I got to get off this tool. Oh, you know why? Because I'm doing that. So Carvana, I really like because of this just great chart that we just saw. And anybody I'm in the auto business personally, that's what I do mainly. And one of the most interesting things about Carvana has been just how it was so apparently a beneficiary of the monetary craziness that's been going on. All right, that it's kind of just on its face. It's like, all right, this is going to be unsustainable. What are we going to do there? So it's phenomenal. So let's get into this chart a little bit. So you had COVID, you had this sell-off, auto markets, everybody's going to stop driving, this, that, and the other thing. It goes crazy. But then we have something very interesting. We have this long trend up. Okay. Now, this was just crazy because when you look at it here, you can just see how much volume went in to this area. Okay. Just how much volume went in. And that volume stayed healthy and consistent throughout. But look at that. Look at that. So institutions were buying. They were rocketing into this position. So thing I think is very interesting here is the book is the story is yet to be written. We can very easily have another period where we see any type of downward action, just totally burglarized by the buying. And that's really what occurred is this buying wave to the moon. Okay. But it's just when you start seeing this base here, this is what I was looking at. Sorry to go all over the place here. But now you see this base here that happens. Okay. It breaks out and then it immediately bases. All right. Now we're breaking out and we're starting to base, but this is very much less healthy. That is extremely less healthy than what we were seeing in these prior base periods as far as candle action goes. This is just, price is so indeterminate and the volume has almost flatlined relative to the wave that was, building this action. So we're getting a lot of exhaustion. That's what that's telling me. People, for some reason, are just not interested at this price. They're not interested in selling it. They want to wait and see. They're not interested in buying it. They want to wait and see. So it also happens to coincide with our averages on that weekly time frame. So let me bring that up. I'm going to spread this out. Okay. So by the way, I did a Fibonacci retracement here. All right. So that's from here to here. The low in COVID to the high of this run, our 38.2 retracement to then continue to new highs is right around 240. So that I'll just go and say right away, that's my initial target on a technical basis if we do start to see weakness. Okay, is 240. So what that helps me do is, depending on how things are going, gives me like a baseline. It doesn't mean it has to go to 240. It just means that it would be nice and somewhat likely on a mathematical basis to get there. So many things influence that. The indicator really means crap. It's just almost like using some kind of tool to help you navigate the stars. It's you're going to be imperfect, apps and other things. So, but I use this as a guideline. So I really like to see when stocks, hit that and then, continue higher. It often indicates a strong period of prior support. And we can kind of see that demonstrated both here when we had the breakout and then here again when we retested before making new highs. All right. So to hit that support a third time and then potentially fail wouldn't be that out of the question. Next is our usual consolidation range, between that 38 and the 61.8, the 50% retracement being the strongest. Okay. Now, that 50% retracement we can see kind of played out in this drama right here. So we know that there is interest here. This interest is initially what, stored the position to fuel these guys higher and even higher as they defended it. Okay, so to see it come back in here, we're going to see, two things happen. We're going to see it base again before continuing lower or higher, or we're just going to see it destruct very quickly. Okay. Um, I'm not too certain that we're going to see these prices right away. Before I even start thinking about that, I really want to see if we can hit the 38.2, which would put us around 240. And again, if we can do that, will then open up the doors, as confirmed by both price and volume, to start thinking in a realistic way about the 200 level, 50%, or even around like 150 and change, 61.8. So before we even get there, we have a lot of things that we have to see, and a lot of stuff policy wise, monetary wise, is going to affect that, because this monster right here is not based on a fundamental business. In some respect, it is, but the majority of its value, I think, is stemming from the financialization schemes, that are abroad, and the inability to afoot rather, and the inability to truly calculate the value of those things. So it's allowing for a lot of speculation. Okay, because there's nothing concrete to win an argument when you have just like more arguments without real solutions, because this piece of information is unknown, this piece of information is unknown. There's just so much uncertainty. You're bound to have speculation, and that's the foundation of my whole thing. With the price system destroyed, the ability to make entrepreneurial judgments using that price system to allocate resources and capital throughout society is very much hampered. And that's just because the amount of uncertainty that's introduced in the picture. The typical response then is to try and reintroduce certainty arbitrarily through policy, but that generally fails, because coordination ultimately is not by diktat. Coordination is ultimately by the price system, which they're destroying. So that being said, if the price system gets more out of control with bubble money and all that kind of stuff, you can expect new highs. But at least currently, right now, with the price action I'm seeing where it is here, it's almost like a 50-50 coin flip. All right. I am long puts in this position. Again, I'm not going to get into expiration. I would just say that they're not too far out. Um, but that being said, what I wanted to see was, I wanted to see a confirmation of the break of the 38.2. I wanted to see 311.92 violated, which we're kind enough to get, with this week so far. We have to close there. Even more interesting will be is if we can close under the 50% retracement fib around 298. If we can close below there, and even, preferably, let me make this a little bit bigger, preferably from a bearish perspective, if we can break there, and I can manage to, we do it on good volume and break these averages. This is the 150 and the 200. We can break those averages on a daily basis. Again, I see the next stop being around the 238, 240 area. So that would imply, on a pure price basis, just off the price movement there, that would imply price range. I think it was 16% drop from current. Oh no, that could imply up to a 30% drop. If we see this and then it reverses, this is going to reverse fast. It's going to reverse hard. I would, and in fact, expect it to somewhat reverse, just because a buy the dip type of attitude. If that happens, then I will be looking to come back to where that average is going to likely end up. And that average will likely end up, going like that, if that's the case. So we're going to have to see, because again, we could get boom, boom. All right. And go higher. Let me stop clouding the screen. So just to zoom out on Carvana one last time and just give just a quick review. And I think one of the best things you can get out of this is why I look at weekly charts. This is why I don't breathe up and down every side of the market. You could kind of just have all that information interpreted through price action for you. Why get too far into, don't get too far in either camp, but why get too far carried away? You got a job to do. One of the biggest things you should learn is that, you're not going to make money on stocks. You're going to make it off of productive work primarily. Anyway, I'm not going to digress into that topic. So, getting back to Carvana, I think we're entering a point of exhaustion. I think we had a great run. I think that consolidation has reared its head only to have a very weak breakout, to which case we are starting to fail. If we can fail that 50% line, I think we're likely to try to at least start a double top. The double top, as indicated by here, a double bottom rather, by here and here, before continuing on to, new highs. If that scenario doesn't work, then I think that we hit this 38.2. Okay. And the next stop would be to try the 200. Now, based on what happens here, we can either have a quick resolution and re-break above, or if we continue to 61.8, the further we get, the closer that we get toward this line here, the more concerned I am. Because if we break that, then I would say the next place we're looking is probably going to be right around the $80 mark. And that's going to mean some very bad things in a much more macro perspective. So Carvana will be the least of my worries, especially being in the auto business myself. So that being said, that's what I'm looking for. Probably should have said this earlier, but feel free to like and subscribe. I think I said it earlier, actually. Just shows you how much attention I'm paying to this whole thing. So that's been Stonks and Crypto. Again, follow me on Twitter at Ruminations. And when I post up, I will. Last but not least, when you go to like and subscribe and all that stuff, if there's things that you like about this, hey, Chris, I just like the way you just run through it. Just say, things. You don't get too technical. You just kind of look at the ebbs and flows. Thank you very much. But if there's things that you think I can improve upon or that I'm just outright doing wrong, you'd like to see more of, I don't care which way you want to say it. Leave it in the comments. Send me an email, economicruminations@gmail.com. Just, get in touch with me and let me know what you think. Let you know where I think I can improve. Thanks very much, and I hope you enjoy it. Thanks for watching Stonks and Crypto.